This is John Shealy of the Wall Street Shuffle and the Traders Country Club, and today we're going to be taking a look at the size of corrections when measured in average true range. It's an entirely different way to analyze the market. It is something that is a specialty of the Traders Country Club, and I wanted to give you an example of how you can analyze corrections in average true range rather than percentage of decline or dollars or points. Let's take a look at it. We're going to start by taking a look at the stock of Apple, and this is the low in March that in which Apple made its low, and it's starting to rise here. Now you see this first correction right here, but forget the fact that it corrected in price. We're going to measure this correction in regards to the average true range that Apple was trading at that particular time. And that's what this special indicator is. So from the very highest high here to the low right there, that move is a correction of about 2.87 average true range. So this correction was slightly less than 3 average true range, average trading range of Apple. Then you see the next correction here. That correction, as you can see, was a little more than 3 average true range. The total correction in this first one, you can see, was a little above 3, but it was about a correction of a little more than 3 average true range here. And you can see this decline here, it also is a little more than 3, but not much. And that's what I'm trying to show you, is how big are most corrections in a bull market. And here we're taking a look at this particular decline here. You can see it's just less than 3 average true range. The same for this new high and then this small correction. This is about a 2.5 average, or actually about 2 average correction. The same for these corrections. You can see this is a 2 average true range correction for right in here. And then finally you're seeing this big one right here, this big one that occurred in early November, and it is a little more than 3 average true range. So that's why I'm showing you this. All of these corrections are between 2 and 3 average true range, some a little bigger, but that's how we're measuring the corrections, not in percentage of price, and not in regards to the dollars that Apple rise or fall in their corrections. And that is the reason we're doing that is you can see that these average corrections were between 2 and 3 average true range. Now let's make this same analysis for a different entity altogether, a different trading contract. Now we're taking a look at the SPY, SPY, for the S&P 500. Now you're seeing these corrections. And this correction, as you can see, is just short of 3 average true range. This one, from the very high to this low, was a little more than 3 average true range. This one, fairly decent size, but you can see it was a little more than 3 average true range correction. So this is a way of analyzing corrections across the board in regards to trading instruments. Here I've shown you the spider. We saw Apple was the same. Let's take a look at a commodity. Here we're looking at a futures contract for the euro currency. You can see a bull market finally got established. Here's a correction. How big was it? This is about 2.5 average true range. So that this was within normal limits of a correction in a bull market. This one, much larger, but how big was this? A little more than 3 average true range. Do you see how we're using average true range to measure corrections, and we're using them as a standard? That way we can measure corrections in currencies, Apple, the spider, other commodities. We can use the same indicator to measure corrections across the board using average true range rather than percent in changes of price and rather than points. Now if you want to know more about the average true range and how it's calculated, go to traderscountryclub.com, go to the chart of the day, and you'll be able to click on a link that gives you a free lesson on the average to range, or the ATR, and how it can be used in your trading as well as research. This is John Shealy of the Traders Country Club, and I'm giving an example of how to measure corrections in average to range rather than price or percent.